Hooty hoo, all my stock market gamblers. Welcome today. It's Labor Day. The markets are closed. I get sad when the markets are closed. But hey, happy Labor Day, everybody. Why am I here if the markets are closed? Well, I miss you guys. Let's have a little conversation. All right, so what's going on in the stock market? We're going to cover this real quick here. All right, so the stock market had this big rally, right? In June, the SPY, I'm going to talk about the SPY, was sitting at 360, right? And it rallied up to 430. That's almost a 19% rally in the stock market from the lows. So that's very good, right? Now it did that. It took 40 trading days, which was almost 2 months. And now we've lost 60% of that in only 10 trading days. So stairs up, elevator down. It's going down a lot quicker than it went up. Now, why is it going down so quick? Well, we have these things called algorithms, right? They're machines that do trading. Now, Goldman Sachs, just last week, they sold $47 billion worth of equities. That pushes the market down. That's just machine trading, right? And it'll probably happen again this week. They're expecting another $47 billion in equities being sold off by Goldman Sachs with their algorithms, with their machines doing the trading. This sends the market down really quick, right? Now, I do expect we're going to go down a little bit farther, and we're at Labor Day today, and usually the day after Labor Day is a down day. We'll see how that plays out. Doesn't always happen, but about 80% of the time, day after Labor Day is a down day. So we'll see now. How do I see this playing out? All right, so we're sitting at the 200-day moving average, 430 on the SPY, and we got rejection off that. We came down to the 50-day. I thought the 50-day might give a little support, but apparently we cut right through that 50-day moving average. Now, I think we'll probably come back in a little bit here, but I do think we'll make a run up to that 50-day moving average before we come down and retest the lows. The lows being around 390. Okay, well, actually, no, we're at 390. Excuse me. The lows being around 360. Now, if those lows do not hold, if those lows at 360 don't hold, we'll come down to what's called the 200-week moving average, which is only a little bit below that, about 350. And we drop through there, run for the hills. That is a huge, massive bear market that's going to be happening. But somewhere the support's going to hold. And I do think we'll rally up to the 50-day again, and we'll see if we can't get above that 50-day, the bear market's going to continue. All right, so let's go over to the housing market now. We're starting to see, well, the housing market's actually starting to pop. Now, of course, not in your area, but it's starting to pop. But look, at 1 out of every 5 homes right now are falling out of escrow. They're just not closing. They cannot get the properties closing. It's for a lot of reasons. Main reason is the buyers, they got cold feet, right? The buyers, a lot of times they can't qualify at this level either. They could qualify at the 3%, but we're up closer to 6% on mortgages now. So the buyers can't qualify, and these are falling out of escrow. Now, in some cities, it's 1 out of every 4 that are falling out of escrow. Now, what else is going on? Well, the sales are way off, way off. The numbers are way down. Let's just take San Diego County, right? Okay, down in Southern California and San Diego, it's down 40% from the time it was last year. It's 40% drop in the volume. Okay, and this is Labor Day, right? Labor Day marks a period of time where we slow down after Labor Day. We're supposed to be in the hot time through summer, and we've been down about 30-40% in most cities on volume. Now, of course, not your city, but most cities, we've been down 30 to 40%. Now, I want to address a situation in the comments here. Okay, so I get a lot of comments like this, and I'm not picking on anyone. I mean, it makes sense, right? They say, well, Mike, in the last 2 years, houses have gone up basically about 40 or 50% up, right? So if we come down 20 or 30%, it's no big deal. Well, I kind of beg to differ on that. I do. I mean, okay. Now, let me explain this to you. Now, there was a guy in the comments here. I got Jay McGee. Okay, now he tried explaining this, and he pointed it out to you all, but I want to talk a little bit about it. All right. So let's say 2 years ago you bought a home at $1 million, right? And you timed it well because in the last 2 years that went from $1 million to $1.5 million. That's a good run up, right? 50% in 2 years. Okay. Well, now the market's come down. Now let's say it only drops, like you say in the comments, only 30%. That won't really be a problem, right? So it went from $1 million to $1.5 million. Now we're going to lose 30% of that. It brings it back down to $1 million. So even though you went up 50% and only came down 30%, you're sitting right at the same level, which is $1 million. Now let's say you have to sell that house. Now a lot of people go, well, no one would sell in this market. There's no reason to sell. They locked in that low mortgage rate at 3%. Well, there's a lot of reasons to sell, and they happen every day. I'm a real estate broker. I get to hear about all the problems. Problems like divorce, right? Problems like medical bills. Problems like losing their job. There's going to be 1 million people losing their job in this recession that we're in, I'm telling you. Okay, and relocation. Maybe you lose this job, but you get one in New York. You want to sell your house. There's 1 million reasons to sell. So, okay, so you've lived there 2 years now, right? $1 million went up to $1.5 million, but come down 30% back to $1 million, right? It lost a third of its value back to $1 million. Okay, but now you got closing costs. You got to sell because you're going through a divorce. You're relocating, you have medical bills, you got to sell. Well, average cost to sell a house is 7 or 8%. So you're down $70,000 or $80,000 from where you bought it at 2 years ago with a 50% increase and a 30% decline. Okay, that's not good, right? You're losing $70,000 or $80,000. But let's talk about what I think's going to happen, right? This is what I think's going to happen. I think we're going to get a 50% pullback, right? Okay, so we went up 50%. Now I think we're going to come down 50%. Well, Mike, that's not bad. We're right back where we started from. Well, not really. Look, you bought the house at $1 million, had a 50% run up, so it's now $1.5 million. But now we're going to get a 50% decline. A 50% decline in that $1.5 million takes you down to $750,000. And I'm not even going to go into the cost to sell that house. You're already $250,000 underwater. But you put $200,000 down because you're a smart guy, right? Okay, so you put that 20% down so you'd have that cushion. And that we busted right through that cushion. We're back at $750,000. Well, what do? Oh, you go, oh my God, I lost all my down payment. My $200,000's gone. Oh, I don't want to make any more payments on this. I owe the bank, I owe the bank $800,000. It's only worth $750,000. So I'm not going to make my payments. And that's what's going to happen. A lot of people aren't going to make their payments. And then what does the bank do? Bank comes and takes the property back. What do they do with it? Well, you know what's funny? The banks cannot sell the property. It's actually illegal for them to sell the property. They have to give it to a real estate broker. I don't know who put that law in, but that's actually a fact. Banks can't sell the properties. They're not in the business of selling the properties, so they give it to a real estate broker to sell it for them. Okay, they got to be licensed, right? Okay, and I like that. The real estate brokers, we got a strong lobby. We lobby for everything. Oh, you got to be, I'm so thankful we live in a country where our government is for sale to the highest bidder, of course, but us real estate agents, we all get together and we get that association of realtors to go lobby for them so they make the laws that favor us real estate brokers. Now, of course, you understand that I'm joking and I think it's completely disgusting, but that's just my opinion. Maybe you got a different opinion. But look, there's a change in this market, right? There's a change in the market. And right now we've got situations out there that are changing. There's this recession coming. Now, Bank of America, they warned that this recession is going to be bad. It's going to be really bad. People are going to lose their jobs by the millions. Millions of people are going to be losing their jobs. Now, you don't see that coming because right now they tell you there's 11 million jobs out there. Well, if there's 11 million jobs out there, why don't the 3.8 million people that are being evicted go get one of these 11 million jobs? Well, because they don't pay enough to pay for their rent. So what? They don't want the job because they can't live with the job. They could live in their car, I suppose. And a lot of people are doing car camping. But Bank of America says this recession is going to be really, really bad. So here's what Bank of America decides to do. Well, we're going to have this loan program where we're going to give, 100% loans to, blacks and Hispanics. Hispanics so that they can buy homes in certain neighborhoods at the top of the market, and then we can foreclose on those homes and give them an even worse credit rating they may have. But don't worry, we're not going to check their credit rating to give them the loan. 100% zero down loans. Now, I think they're doing a disservice to these people. I really do. They think they're helping them, but I think it's just a disservice. Look, they're not going to be able to make the payment. They're buying at the top. Now, if they did this when the market was at the bottom, that'd be very generous of Bank of America. But no, the reason they're doing this is they've run out of people that can qualify. They can't have any more qualified buyers. So we're going to start to do those unqualified buyers, and we're going to make it look like we're helping out the blacks and the Hispanics. Now, to me, it's just they're not doing them a favor. They're going to end up in foreclosure. They're going to have their credit ruined. And they aren't even going to check the credit score to get them into the house. It's Bank of America. I don't get it. So many things I don't get, and it's Labor Day. Markets aren't even open. Oh, man. But I'm excited about tomorrow. Tomorrow, the markets are going to be open. So you want to hit that subscribe button to see what's going to happen this week. But I think that market's going to come back in. I think we're going to retest those lows back in June. And I'm hoping they hold. But if they don't hold that, we got support right at that 200 week, and we should bounce off that and head up higher. It'll be a tradable bottom at that point, but that's all I got for today. I'm Tall Mike. I hope you're out there having the best Labor Day you've ever had. Get out there and enjoy the day. Bye-bye now.